have a look at the stock of the day, and I thought we would focus on the lithium sector, because the lithium sector is always controversial and interesting in Australia. And Pilbara Minerals today is one of the top, up about 3% today on the All Ordinaries. And it's interesting because you actually have UBS having come out this morning saying they have cut their forecasts for lithium miners between 10 and 40% in the short term, but over the longer term they're actually a lot more bullish. So I thought, well, with lithium stocks undergoing a bit of profit taking recently, let's focus in on Pilbara. And yeah, Scott, would you be looking to buy at these levels?
I'm going to disappoint you and your viewers, Danielle, but I will be controversial, so that's always fun. Mate, I've been a long-term avoider of the lithium sector, and that's not changing today, and it's not changing when it comes to Pilbara. And it comes down to a couple of things, mate, but largely it's very, very difficult with any confidence to forecast the long-term price of any commodity, including lithium. I have absolutely no issue in believing that we will be using a lot more lithium and a lot more battery uses, large electric vehicles, home storage, battery storage at a grid scale. Those things I think are very likely. Now, they're not necessarily guaranteed. The next battery technology may not be lithium ion. I'm not an industrial chemist, so I'm not going to make a bet on that, but that's part of the problem, right? Unless you know what that's going to be, that's hard. Even if, and let's assume, lithium demand remains strong and is the battery mineral of choice over multiple years to come, the next question is then, what does the price look like? Now, I've told this story before on the call. If you look over the 20th century, the price of oil went up about 2.5 times roughly in real value, adjusted for inflation, real value. That's despite having no meaningful oil drilled in 1900. By 2000, we were doing hundreds of millions of barrels a day. Now, if you think about that, think how can that exponential growth still only have had the price go up by 2.5 times or so? The answer is because more supply comes on stream, it gets cheaper, technology improves, and what you find is a supply response as well as a demand response, even with that astonishing growth. If you'd said to me in 1900, hey, here's what's going to happen on oil over the 20th century, I probably would have lost a lot of money by saying, you know what, I'm all in. Lock me down, put me down for everything. That's going to be fantastic. I can't wait to be part of it. And yet, the price has been largely, well, I'm absolutely sure, disappointing. If you'd asked someone at the beginning of the first wildcat strike and said this is what's going to happen to oil, they wouldn't have believed you. So I don't know what happens, and sometimes the too hard pile is a very welcome place. So I'm putting lithium there squarely and fairly. I'm not bearish, not betting against it, but I'm absolutely not betting for it because I have no concept of what the price will be in 3, 5, or 10 years' time. And as an investor, as a long-term investor, if you don't have a view on that, I don't think you have a place investing in lithium.
Yeah, that's fair enough. The commodities can be challenging to say the least because they are highly cyclical. With that perspective, Joshua, how are you looking at Pilbara?
Yeah, probably a little bit similarly, but on a probably much more shorter time period. So it's obviously been a great performer over the last few years. Lithium miners have been bid up since the start of 2021. But prior to that, again, we were in a consolidation period for about 4 years as there were concerns that there was going to be an oversupply and that the demand would raise. So I think we will start to, switch over to that. That's capitalist market at the end of the day. The more it's demanded, it's obviously going to be supply will be matching that if there's cap money to be made. So we're seeing that now. A lot of lithium mines are due to come online over the next couple of years. So yeah, not necessarily bearish on the lithium market, but it has struggled this calendar year anyway. And we're going to see some consolidation in that area. If you do want a pure play lithium, this would be my preferred name because they do have the BMX platform where they can sell their lithium to bidders rather than agreement with a single firm, unlike a lot of other Aussie lithium miners. Plus, they are paying dividends as well. So if you do want to be in this space, I think Pilbara is the best place to be in that space. But even just in the ultra short term, it is struggling to significantly go above that $4 mark this year. So I'd just be cautious with it at least.
Cautious and not really looking to buy at these levels then?
No.
Okay, fair enough. Right.